What's going on, guys? Bexio back, and today we got a brand new video with Coinbase versus the SEC. Something that's starting to go on now with the SEC filing suits against Coinbase and going after them and subpoenaing them because of things of listing like securities, unregistered securities on Coinbase, the crypto kind of native down there, and going after their staking programs because we've all seen what happens with things like Voyager and Celsius when the staking programs and interest bearing accounts go wrong and people lose all of their money. But this is kind of weird from something like Coinbase because Coinbase is a company that has always gone to try and get approval from the SEC, play by their rules. And earlier, when they tried to introduce a 4% yield on USD in Coinbase accounts, they actually got pushback from the SEC and they cut it altogether and didn't pursue that anymore. They weren't happy about it, but they listened to what the SEC told them to do. So seeing this coming down is kind of a big deal because Coinbase really does work with the SEC and try to work with them. And this is the article here saying Coinbase confirms the SEC subpoenas over listings and their staking program. So right here, this is where it all comes in. U.S. Securities and Exchange Commission issued subpoenas from Coinbase for documents and information relating to its crypto products. The SEC was seeking information on how it goes about listing specific assets, as well as its operations and customer programs. This one probably a little bit fair for the SEC to be wondering what's really going on, because Coinbase used to be the like holy grail of listing coins, where they would do all the due diligence, really make sure that a project is sound, is not a scam, is not trying to do anything bad. And if you got listed on Coinbase, it was like the end all for your project. It means like you went through, people did the research, and it was like a stamp of approval for a crypto project. But now it seems like Coinbase just kind of approves whatever they want and whatever is hyped up at the time. And that makes sense. With them going public, they need to drive more revenue. How do you do that? You quickly approve the projects like Sheeb and Doge and all of these, where the memes start to get everybody hyped up and everyone jumps into them. You're going to want that business coming to your platform to make you money. But it also looks at the investigation is also seeking information on Coinbase's staking programs as well as its yield generating products. Again, probably fair for the SEC to do this. We saw Voyager collapse, we saw Celsius collapse, and in those collapses, people lost all of their money. Every single dollar that they had in those platforms is gone. They're hoping to get it back. They're hoping something comes where they can get some money back. And, the SEC, being this organization that's supposed to protect people and protect investors, is really bad for them if they had Coinbase go under and something like that. Probably not going to happen, but the SEC is trying to do its job and protect investors, which it really hasn't been doing for a long time. But now maybe they're trying to step up. But it does make sense that they want to look at the yield generating, interest bearing kind of stuff to make sure that it's not super dangerous, because we saw what happened in the past, and there's the big things around super dangerous investments are usually only allowed for accredited investors, so that those are the people that could afford to lose the money. And in a bigger problem, a separate matter, regulators also charged Coinbase's former product manager for insider trading. Who would have thought that would have happened? Somebody who knew things that were getting listed on Coinbase before they were listed would insider trade and make money off it. Who could have ever predicted that happening? So this is definitely a big problem. And if we look at this right here, this is the kind of thing from the SEC charging the Coinbase manager and two others in the crypto asset insider trading action. And you can see the long-running insider trading scheme generated illicit profits totaling more than $1.1 million. These guys got over $1 million from trading things that were going to be listed on Coinbase, buying them before they're listed, selling them after they got listed. So made a lot of money, $1 million doing that, and super easily. You know it's going to get listed. You go out and buy it somewhere else. It gets listed. The price goes up. You sell it. So, something that shouldn't be done, but obviously if they think they can get away with it, people are going to do it. And in the past with the SEC, we saw them threaten to sue Coinbase last September over its proposed lending accounts, which would have offered up to 4% interest on USD coin deposits. Okay, so it was USDC deposits. So sort of the stable coin stuff, which we saw how that played out before. A lot of problems with the other platforms that collapsed. Said them 100 times, but this one, probably again, they're going 3 for 3, the SEC. Things that are probably good things to kind of look into and make sure nothing crazy is happening, because the last thing you do want is a major exchange. Voyager was not that big, but it was big enough to really hurt people. Celsius, again, not that big, but the people that are involved in it getting hurt a lot. There's other examples of not that big exchanges that are, collapsing and people losing everything. But if a Coinbase, a Binance, or an FTX were to collapse and lose people's money and it all go to zero, then millions and millions of people would be affected. It would be a massive problem, and no one would be happy with that. So the SEC trying to make sure that the big guys don't collapse and take on unnecessary risk to kind of compete in this market, which is unfair to Coinbase, because obviously they're saying, these other platforms are doing it, why can't we? And we see now that these other platforms don't exist anymore. And then to go on top of that, the SEC, not even the only one going after Coinbase, saying these are just one headache from the embattled exchange. Coinbase is staring down multiple class action lawsuits, including one alleging it allowed its US customers to trade unregistered securities. A separate class action lawsuit filed in June alleges Coinbase failed its duty of care by listing the revamped Terra Classic token and neglected to disclose an alleged financial connection with Terraform Labs. So we all know how Terra Luna happened and how that ended up. So, Coinbase launching its new Terra Classic token, and if it has financial ties with the Terraform Labs, the one that lost tons of money on Luna going to zero and Terra going to zero, then maybe there's a little bit conflict of interest there, and that could be a problem as to why they're listing their second token and their revamped token that is ultimately just kind of a scam way to get out of accountability for their collapsed depeg stablecoin. So ultimately, a lot of things that the SEC is talking about Coinbase and going after and investigating are pretty valid. They need to make sure that Coinbase isn't going to turn out like a Voyager, Celsius, other collapsed crypto companies, because if it did, that is a major, major problem, and way more people will be affected from this happening than the combined total of all the other exchanges that collapsed. So all of the points the SEC brought up that they want to investigate, make sure everything's going all right, it makes sense. None of them are kind of egregious and going after them and just kind of making things up out of thin air. So we'll see how it plays out. I don't think it's going to be a massive problem for Coinbase. They have always tried to work with the SEC and, try and apply by their rules. And here, if they're still being investigated by the SEC, I doubt Coinbase is going to try and do anything nefarious and go behind their back and stuff. And the SEC also probably can feel that it's a good relationship with Coinbase. It's not a company that's been trying to go behind their back or go through loopholes or try and find ways around or just do things regardless of what they say. So ultimately, I think this is something that isn't going to extremely affect Coinbase and make it just, a terrible place or collapse its business or not allow it to kind of do things. But it is definitely a tragic scene to ever have to deal with the SEC. And as for Coinbase stock, that is actually recovering here, where we see it's not, it's still not great. So zoomed out here, we can see 368 from this peak before this fall here to $90. But right now, maybe we're seeing this kind of bottom here into a recovery. So this news kind of broke the other day, definitely brought the price down a bit, but coming back up to $90 here from $50 before, around this range. So the stock ultimately not really affected from this news, kind of sweeping it under the rug. It is fair to say the rest of the market is in extreme rally mode right now, so that obviously helps. If the market wasn't super green, then Coinbase stock could easily be plummeting because of this news. It's bad news. But right now, not seeing it pretty unaffected, and even maybe in the Coinbase world, seeing a recovery here. Maybe we start to see this price try and creep back up to the three-figure club, getting to $100, $200, and ultimately trying to get back to where it came from, $430. That might be a long ways away, though. So nobody wants to deal with the SEC, and having the SEC come after you is not a good thing. But Coinbase probably get through it. They'll definitely work through it and be better off on the other side and still be an exchange, still be doing their business and moving forward as usual. But ultimately, it doesn't really matter even if the SEC's deals coming in, because Coinbase's earnings were terrible. So if they need to try and pick that up, and it's probably gonna be a tough few months to maybe few years if the crypto winter is here and Coinbase just doesn't have the trading volume that it had during the bull market to make money. That's gonna do it for this video, guys. As always, don't forget to smash the like button and subscribe in the road to 1,000 subscribers. I'll see you guys in my next video.